Hi, welcome to today's tax update. In these difficult times that the world is facing, and following the guidance issued by our Ministry of Health, today's webcast will be brought to you away from the office, right here from our home. So let's move inside and start the webcast.
In line with the international community's measures to tackle the coronavirus outbreak, we at Deloitte, having an absolute sense of responsibility towards the health and well-being of our people, have embraced the smart working initiative and we are staying at home. I hope you are doing the same. Our tax update for this month will focus on the local developments of March 2020, some of which have been brought about by the coronavirus outbreak, which is undoubtedly the most challenging matter faced by humanity in recent years. Let's have a closer look at these developments. We will start with local developments. In consideration of the business disruption caused by COVID-19, the Cyprus government announced a package of measures in order to support the country's economy. In our tax webcast, we will cover just the tax-related measures that were announced or voted into law. All the other related measures in connection with COVID-19 can be found at our specifically designated section on our website. We will begin with the direct tax measures. In accordance with a decree issued on the 30th of March, a new deadline has been announced for the submission of the 2018 corporate income tax returns and personal income tax returns of individuals preparing audited financial statements. The deadline is extended from the 31st of March to the 1st of June 2020. With respect to the general healthcare system, there has been some confusion as to the date from which the reduced contributions will apply. The law that was voted by Parliament provides for the continuation of the reduced contributions to the ESC for the months of April, May, and June 2020, which apply for all contributors. Accordingly, the increased contribution rates to the ESC will apply as planned for the whole of March and from 1 July onwards. The law regulating the settlement of overdue social insurance contributions was also amended so that the repayment period for overdue social insurance contributions in installments for March and April 2020 is extended by 2 months. This applies to taxpayers who were included in a settlement scheme as at 1 March 2020. Moving on to the indirect tax measures, it is important to note that the initial VAT measures that were announced on the 15th of March 2020, which included a reduction in the VAT rates, have been withdrawn. The final VAT measures are reflected in the amending law that was voted on the 27th of March. The amending law provides for the temporary deferral of the VAT payable for the periods ending 29 of February, 31 of March, and 30th of April until the 10th of November 2020. The temporary deferral will apply provided that the taxable person submits the relevant VAT return by the statutory due date and the VAT payable amount for the above period is settled by the 10th of November 2020. As long as these conditions are satisfied, the following will not apply for the above mentioned periods: the additional tax of 10% on VAT payable amounts, the current public interest rate of 1.75% per annum, and any criminal sanctions against the taxable persons for failure of VAT payments and submission of tax returns. Important to note that the deferral does not apply to businesses with economic activities that belong to the codes shown in the table and in accordance with their registration certificate. During March, there was an interesting development with respect to the appointment of the tax commissioner. In accordance with the decision of the Administrative Court, the appointment of Mr. Tsangaris to the position of Commissioner of Taxation was considered void. The court ruled that the appointment of the commissioner back in 2016 by the Council of Ministers was a violation of the Constitution. The court held that the position of the Commissioner of Taxation is a public service position, and the only body competent for appointments to the public sector is the Public Services Committee. This development means that any decisions of the Commissioner which are under objection are considered unenforceable. In addition, there are doubts as to the application of the decisions of the Commissioner in the form of rulings and circulars issued, unless the new Commissioner, when appointed, adopts such decisions. Let's now have a look at an interesting development regarding Russia. On the 25th of March, the Russian President Vladimir Putin announced that all dividend and interest payments made from Russia abroad would be taxed at 15%. Unavoidably, this affects the tax treaties that Russia has signed with other countries, and therefore the Russian Ministry of Finance clarified that it will seek to renegotiate those treaties that are affected. Although such a list of treaty countries has yet to be finalized, it is inevitable that Cyprus will be one of those countries that is affected. The Russian ministry went on to clarify that should a country not accept a renegotiation, the Russian side has the right to withdraw the treaty. So an interesting development to watch out for. But whatever happens, no changes can take place before the 1st of January 2021. We will close off today's tax update with a brief reminder of the upcoming deadlines. 31st of March was the deadline for the electronic submission of the income tax return for companies and individuals preparing audited financial statements for the tax year 2018. As previously mentioned, this has now been extended to the 1st of June 2020. 30th of April is the deadline for the payment of the first installment of the premium tax for insurance companies in the life business sector for 2020. We have no indication that this deadline will be extended. This concludes our tax update for this month. Thank you for watching, keep healthy, and please stay at home.